What's going on, everyone? This is Jordan with Conquer Trading and Investing. In this video, we're going to look at what the next move for the US dollar is. In the past week, the Federal Reserve has expanded their balance sheet by another $270 billion, which now stands at $6 trillion, up almost $2 trillion in just 42 days. Now, because of this, a lot of people are starting to make, perhaps rightfully so, turn really bearish on the dollar. Now, here's a look at the Fed's balance sheet. You could see that it was leveled at about $4.5 trillion after the 2008 financial crisis. And it wasn't until about 10 years later that the Fed tried to actually start quantitative tightening. That lasted about a year and a half, and they got off about $500 billion off their balance sheet before last September when the repo action started. And you can see that since then, we have added about $3 trillion to the balance sheet, which now stands at just over $6 trillion. Now, most of the increase has been due to outright holdings of treasuries. Repo loans have decreased, and mortgage-backed security holdings have been fairly flat. Here's a look right now. Foreigners have sold about $12 trillion in U.S. treasuries in the last week from their custody holdings at the Fed. You could see that huge sell-off over here. Now, this is a slower pace than the rate that they were selling last month during the dollar spike. And the reason for that is because now there are various liquidity operations in place, such as swap lines, which are helping banks get those dollars they need overseas. They had to, during the dollar shortage crisis, sell their treasuries to get their dollars. Now you can see this is leveling off as the swap lines have taken hold. Now, a lot of traders have turned really bearish on the dollar recently. Perhaps rightfully so, due to the Fed's actions. There has been a really extreme increase in the balance sheet, and that looks like it's actually going to continue. Actually, it was just on this past Friday, a few days ago, when Fed Chairman Powell hinted at next that they will be looking to actually buy stocks. Now, I'm at the point where I've been a very strong dollar bull, where I'm at the point where I want to go ahead and weigh that argument. I'm always questioning my base case scenarios, my thesis, always looking at the other end of the trade to know that I have conviction in my own trade. So right now, I am just trying to figure out whether or not I'm going to remain a dollar bull. Now, ultimately, it all comes down for me onto the technicals and price action. And that's what I follow, but I have to have that fundamental macro view around it. And here we go. We see that Raoul Pal has kind of weighed in on this argument, and he shared a chart of the ISM versus the Fed trade-weighted broad dollar index, which is inverted in this case. And his argument is that, he's going to remain a dollar bull, being when the ISM falls to 35 or lower, the dollar should rally hard. Now, where does he pull up that 35 number on the ISM? He's basically looking at the ECRI and is saying that it's telling us that the ISM will soon be trading also at 35. You could see the tight correlation between both the ECRI and the ISM. And here he expects a drop in the manufacturing. Now, if you think about it, the majority of the country is still on lockdown. It's going to be quite still either few or several weeks at the earliest before manufacturing starts picking up once again. We're still going to see a significant drop off, and that would suggest a higher dollar. Now, if we do explore that bullish dollar case a little further, let's see what that means. Let's check out some charts. And over here, we have a chart of the Euro US dollar, which is currently trading, you could see, making a series of lower highs and higher lows. It's this triangle pattern that is developing, and it's getting set to break down. Now, a stronger dollar would suggest that this breaks to the downside. And if it does break to the downside, you could see here, if you zoom out to the monthly view, that this trend line would actually be lost on the next move down, and that would open up a significantly lower lower, massive euro trend line break. Coming here, looking shorter term at the euro US dollar, you could see this channel that it's currently trading in right now. You could see that the trend line is currently being tested. So perhaps a break here to the downside, which is currently testing this support right now. Earlier during the New York session, you could see the break below, came back up into this resistance and is now taking a look down, start making lower lows again, right? And you could say that this was a confirmed breakdown of this channel, and that actually might open up the move down for the break of this trend line. It is possible. Further looking over at what a bullish dollar would do over here, you could see over here taking a look at the ADXY. This is the index of Asian currencies. You could see that this has broken the neckline and has since bounced up to test that broken support as resistance. If this does resume downwards, we should see a really sharp move to the downside. You could see this head and shoulders pattern. You can see the left shoulder right here, the head and the right shoulder. So we're talking about a projection of a significantly lower move here, the dollar versus the Asian currencies. We have the JPM emerging market FX index, and that would again keep making lower lows should the strong dollar continue. Raul sums up his thought process by saying he thinks that the market's narrative of quantitative easing of QE will equal a lower dollar will prove to be a false narrative, as the economic fundamentals, dollar debt dynamics, and negative trade flows will force the dollar even higher. Now, this goes back to the dollar milkshake theory when we talk about the dollar debt dynamics. There is an extreme, it was a 12 or $14 trillion shortage of US dollars right now in the financial system. As the debt levels are increasing right now, all that does is increase the further demand for US dollars. The principal and the interest both need to be paid back in dollars. The negative trade flows, as the global slowdown has hit, as most of the world is on quarantine and in lockdown, and trade flows have slowed down, countries that need those dollars are not receiving them through trade. The price of oil, which is trading down all the way near between 20 and 25 right now, right, is causing a significant lack of dollars that are normally received through trade. This is all a self-fulfilling loop, which causes a stronger dollar. Now, Raul does go on to say that he thinks the euro should be the first to tell. So we're going to watch the euro closely and see whether it starts to break down further this week. Summing it all up, we do have long the dollar versus a basket of currencies, long gold and long Bitcoin. If you do believe that the debasement of the monetary supply, the amount of expansion that the Federal Reserve has seen over the past few weeks and will be increasing in the months going forward, you're going to see gold and Bitcoin strongly repriced higher. At the same time, you are going to see a stronger dollar. And that's what we're looking at right now. This remains my base case. But at the same time, I will continue to be really focused in and watching to see if at any time this proves false. If at any time the amount of dollars being printed, right, the quantitative easing has an effect of a weaker dollar, I'm ready to go ahead and flip-flop and position it accordingly. Now, to sum this all up, what this leads to is to being long the US dollar versus a basket of currencies, right? A basket of currencies, right? Not just the euro, right? Australian dollar, New Zealand dollar, Canadian dollar, Mexican peso, a basket of currencies for sure, long gold and long Bitcoin. If you do believe that the expansion of the Fed's balance sheet, of the monetary supply, is going to be repriced, it's going to be repriced inside gold and inside Bitcoin. Now, this does continue also to be my base case. That's why I wanted to go ahead and work through this with you today. However, I am still, because of what is happening, because of the dynamic being changed right now with the Fed expanding their balance sheet by such a significant amount, with this quantitative easing, printing, right now we're doing $40 billion a day. That's more than a week during the height of the 2008 crisis. it has the possibility to actually go ahead and weaken the dollar. So I'm aware of that, and I'm watching out for that. And if at any time I see the turn, I'm going to go ahead and position myself accordingly, right? And get short dollars, right? But you have the long Bitcoin, long gold as a hedge versus that dollar. But at the same time, I do believe we're going to continue to see that dollar strength priced in. All right, I will be actually going ahead and publishing more of these videos, working out the macro trends, taking a look at different aspects, not just the charts of the markets. As I work through my different investment ideas, share them. It really helps to articulate them, to present them in a manner that can be shared with others in order to fortify them myself and help me trade accordingly. And I do hope that it does help you as well. If you enjoyed this video, if you like the style of this video, go ahead and hit that like button, and I'll be sure to be able to see that and go ahead and produce more of them. All right, everyone, have a great day. I'll talk to you later.